Hello, everybody. Good morning or good evening, good afternoon, wherever you may be calling in from the world. Such a pleasure to have you here today. We have the brilliant Chris Gerber, my brilliant co-founder, and our Valkyrie CIO, Stephen McClurg. And I think that this is going to be an incredible webinar. So again, thank you so much for joining us. So I'm going to start with a little bit of housekeeping. I am your host today. My name is Leah Wald. I am Valkyrie's CEO. I'm also going to just quickly talk about Valkyrie, talk about what the agenda looks like for today. So Valkyrie is a digital asset management firm. We have a series of cryptocurrency grantor trusts, SMAs, ETFs, and a DeFi hedge fund. We'll get into that a little bit more later. As for the agenda, I'm going to start off right now. I'm going to introduce in Chris and Stephen. We are going to then roll into QA that will be started by Chris asking Stephen all the questions he's getting from financial advisors and maybe some secret questions he has for himself as well for Stephen. Then I will take audience QA. We have a lot that was already prepared and written and sent to us previously, but I'm also going to look in the Zoom chat for the QA function. So please put some in there. We will then roll into Stephen, who's going to present a high-level macro overview of the markets. Again, please send in QA. I will try to get to as many as possible, but likely on the macro update, we'll have to follow up with you, and then we will end. So let's kick this off. So I guess just starting off, as your host, a little bit about my background. I come from the World Bank economics background, then worked for an activist investing multi-billion-dollar hedge fund specialized in Asian equities and LBO. I've been working in the Bitcoin asset management world full-time now since 2016. So I've definitely had a little fun with this market. I do come from a technical analysis background and published the book Hyperwave Theory, which was promoted by the CFA Institute. And while serving as a US diplomat recently in Singapore, I was asked to speak about it. So I will turn it over now to my more brilliant panelists. So Chris, can you please start us off by telling us a bit about your background?
Sure, that would be fine. First of all, people should know I'm in my car because I'm moving across country, and this is the trip that was planned many months ago. And these two events have converged just south of Atlanta, actually. So if you see a halo behind me, it's the sun. It's not because I know anything more than anyone else. But background is I've been in the securities industry for about 40 years. I started back in 1982, before probably many of you were born, and became a financial advisor, financial planner. Then about 2004, I started my own money management firm known as Private Wealth Counsel of Minnesota, and did basic money management. I sold that business, gosh, I don't know, about 5 years ago, something like that, and have worked actually, I'm one of the people who found out I couldn't be retired. And so I began managing money for another company, a local firm, managing about 750 million in Minneapolis. And then recently I took a job with an outfit called Fidere Advisors, and I'm managing their money now. And so I have friends in the industry, and it's kind of nice to be able to work for them, which the last two people have been. And so this is what I do with a lot of my time during the day. Outside of that, I have hobbies. I've always enjoyed tennis, martial arts, and I stopped that about 10 years ago after I realized the young guys were beating me up more than I was beating them up. And then outside of that, I have a wedding photography business on the side. So I'm technically supposed to be retired, but this is a lot more fun than working. So here I am.
And I heard that you're quite the avid tennis player.
Yeah. And you mentioned CFA Institute. I've done a lot. I should mention I've done a lot of work for them on their exam grading process. I graded exams for about 20 years. I was a standard setter on the standard setting committee, and a grading captain for, I don't know, 5 or 6 years, something like that. Did my 20 years there and decided it's time to retire from that too. So I can play more tennis now, and actually I really enjoy the money management function. I think it's one of the more creative jobs in the entire world. And those that look at people like you and me from the outside don't think that we're all that creative. But this is an extremely creative business. It's highly tech and highly creative. What a business to be in.
Thank you so much, Chris. It's a real pleasure to have you here today. And
Thank you.
on to you, Stephen, quite the creative. I actually call Stephen our mad scientist in the product room quite often when he's not around. But Stephen has a prolific background in creating products with esoteric securities. So Stephen, can you tell us a little bit about your background as well?
Yeah, I'll be brief. Mine's pretty boring. I traded bonds, I managed bonds, and then I managed portfolios across a lot of different clients, including institutional, insurance, pensions, private wealth funds, as well as created and managed mutual funds, ETFs, most of the time at Guggenheim Partners, and then got to the world of blockchain in about 2016 as well. This is now the third asset management business that I've helped build in this space.
Thank you so much, Stephen. All right, without further ado, let's jump into the fireside chat. I'm going to step back for a bit. Chris, would you start us off by asking Stephen any questions that you may have?
Sure. And I remember before you mentioned a secret question, I will save that one for last.
Ooh, okay.
But Stephen, one of the questions that let me give a quick little background. I'm beginning to look at this sector very hard. In fact, I know that I want to add it to our portfolios. Now, I have to convince an investment committee, so I'm probably going through what a lot of people go through when they're reviewing this asset class. So I've learned a decent amount about it, but one of the things I think you could help me with is understanding what the macro headwinds and tailwinds are for this asset class.
Yeah, absolutely. Well, we'll start off with the tailwinds because that's usually the easiest, and that's what we like to promote as well. Coming from the world of fixed income, we're in a place right now where I don't even own fixed income at all in my own portfolio. It's the asset class I know the best. I know it better than cryptocurrency, and I own none of it. Primarily because if you look at the latest CPI print, we were at 6.2% CPI. And by the way, that's not even what real inflation is. We're probably closer to double-digit inflation, closer to 18%. So when you have that high of inflation and U.S. Treasury yields 1.6%, high yield bonds, a basket of global high yield bonds yields 4.2%. On a real basis, you're losing money. And we're now in a world where all the money printing that we've done over the last 12 years and the massive amount of money printing that we've done in the last year and a half, as well as spending programs that have been passed in Congress, have caught up with us. So we're in a inflationary environment. Fixed income doesn't work. It's not something that you can really hold in a portfolio. You're losing money in that. Equities feels really, really high. So you've got to start looking into creative asset classes. And creative asset classes are anything from, I remember back 10 years ago, we were starting to look into that, things like intellectual property, right? Sports teams, other types of IP, entertainment IP. I mean, those are some of the creative things that I used to be involved in, just to get that extra income for clients. Cryptocurrency is another thing, particularly Bitcoin. Bitcoin has become the new gold for the digital age. It's uncorrelated. It does have correlations to the market, but it's highly uncorrelated, and it also has tended to be anti-inflationary, given its fixed supply. So those are the tailwinds. As we're in an inflationary environment, as we're looking for alternative asset classes to go into, this is all very good for Bitcoin and other cryptocurrencies. As far as headwinds go, that's another really important question, because one of the things, if we were talking specifically about Bitcoin, it's largely been a speculative asset for the first 8 to 10 years. as the network has grown and the usability of it has grown. It's now moving from that speculative stage. It's purely a risk asset, but it's starting to move into that inflationary hedge stage. And the next stage beyond that will be, a much more usable digital currency. So as we're entering this stage, you will, if there's a risk off situation, if the S&P drops 60%, if the S&P drops 40%, Bitcoin will likely do the same. So it is very much a risk asset in that regard. But as we know, equities are also an inflationary hedge. And as inflation continues to dominate the picture, so should Bitcoin.
Okay, so you entered into an area that I wanted to ask about also. And the question is this a risk asset or a flight to quality asset or both?
Yeah, I wouldn't call it necessarily a flight to quality yet. Maybe in the sense of protection against inflation, that would be true. It's still very much a risk asset. I would categorize it about 80% risk asset, about 20% anti-inflationary asset. And
Okay.
that shift is going to continue to move towards anti-inflationary.
Okay, so one of the things that we've run into as we've learned about this asset, and I compare it to the internet, and there have been a lot of internet comparisons. When the internet became a thing, people began making applications for it, practical applications for it, right away. The Microsoft Word, internet searches, then all of a sudden everybody's in it because there was an immediate use for it. What I don't know about this is, and I'm thinking especially of a Bitcoin, for example, the practical application, because not many people really buy stuff with this. And I know maybe a few more are, but it's not something where, boom, there was a rush to a practical application of it. So now I have to work through in my mind, well, if this thing isn't really applicable that we can see, when is it going to be and how is it going to be? So that's the question for you.
Yeah, those are really good questions. And the first thing I want to do is bifurcate blockchain into two different areas that are really important. So utilizing blockchain technology, one of the uses is cryptocurrency, which is what Bitcoin is. Bitcoin is a cryptographic currency. It's digital cash. Okay. Another application for blockchain is what we categorize as protocols. And protocols is what you described, very similar to the internet, where things are being built on top of it. I like to compare it more to the iPhone. Right. So protocols like Ethereum, Polkadot, Algorand are essentially various iOSs that applications are being built on top of. And they're very useful applications. And they are, there are a lot of things being built on, particularly financial applications, but other applications as well. So that's the internet side of things. On the Bitcoin side of things, or the cryptocurrency side of things, we are starting to see it being used as a currency. In the early days, it was mostly used by developers. I took a break from financial services for about 2 years back in 2007 to work at a video game company called Electronic Arts and their strategy division, particularly focused on mobile games. And one of the things that I noticed at video game developers is that they have studios all over the world for efficiency. And various studios are going to build different things. And when Bitcoin came out, what I noticed was it's a lot easier to send Bitcoin around the world to pay people than it is to send dollars and then convert that dollar to local currency. You can only wire money during certain times on certain days. Bitcoin you can transmit 24/7. So in the early days, it truly was a currency for global developers that were building things and that could use it because they were the only ones really smart enough to be able to use Bitcoin back then. And then as useful tools began to come into the picture, and exchanges and custody accounts and wallets came into the picture, everyday people like myself can now use them. In the same way that you can use Venmo to send payments, to pay people for pizza, for cutting your hair. There's other applications where you can send Bitcoin via a wallet to people doing the same thing. And people prefer Bitcoin because it's anti-inflationary to the dollar. The other interesting thing about Bitcoin is you can send large amounts and large transactions globally at a very low cost, cheaper than it is to send a wire and more accessible than a wire. So much so that one country, El Salvador, has already adopted it as its official currency. I can go to El Salvador and use my phone and buy McDonald's, buy coffee, buy goods and services, just like a Venmo type app, just scanning my phone at various places. And it's widespread, particularly using the Lightning Network. So in the last year, we've seen a massive amount of adoption for actually utilizing it. Now, we're not seeing it in our everyday lives. You're not driving into Starbucks and using, buying things with Bitcoin. But it is really starting to take off.
Can you explain the Lightning Network?
Yeah, absolutely. So first of all, the way that Bitcoin works, and I'm going to go back in time a little bit. So when Bitcoin was created, there was a 10-minute standard. And that 10-minute standard is the time that it takes to create subsequent blocks of data. And it's really a security feature, so that in a 10-minute period of time, you really can't hack the previous block because everybody can see what's happening. And then the next block is created utilizing the same amount of data. The downfall to that is transaction time. So if I were to send a payment to you right now, it would typically take 10 to 30 minutes for you to see that payment if I were to just send it using the normal Bitcoin network. Then something happened where there was a gentleman by the name of Charlie Lee, who really was a big fan of Bitcoin and an early adopter of Bitcoin. And he was actually the first developer at Coinbase. And Charlie Lee came up with this idea that, hey, we need something that moves a little bit faster. So what he did was he created Litecoin. Litecoin's original purpose was to process transactions in a quarter of the time for a quarter of the cost. So its processing times was 2.5 minutes. So it doesn't have the same security that Bitcoin has. You trade security for speed and efficiency, and it was really meant for those smaller transactions. And then the Lightning Network came along and said, oh, we like that concept of what Litecoin was trying to do, but what we want to do is be able to transact on top of the Bitcoin network, where we can make payments back and forth. It'll still get recorded in that block on the blockchain, on the Bitcoin blockchain every 10 minutes, but we can do all these really quick transactions in between those two times. So that's considered a layer 2 system, where that you can make all these transactions and they get recorded and secured every 10 minutes.
Okay.
I hope that I explained that.
Yeah, no, it's quick. It's quick. That's the important thing. Okay. So now I'm sitting out here as an investor and having to convince an investment committee that this is good stuff. And it's really purely what I call a delta instrument, in that it's there's nothing really backing it. It is simply it's a risk asset, and it moves in certain ways. Okay. You have made products that are involved with both mining and staking. You're creating income off of those products, and understand that. Then in order to get the money out, to get dollars out of it, you have to convert it by using one of the exchanges into dollars somewhere. Okay. From a conservative standpoint, is there a way that, since you're doing something I consider fairly conservative in the Bitcoin market, you're mining and staking as opposed to just throwing your money in and seeing what happens, is there a way to hedge Bitcoin values or cryptocurrency values, or is there not really a way to hedge those yet?
Oh, there's you absolutely can hedge those now. And the hedging primarily came into place in the beginning of 2018, when Bitcoin futures came out. So of course, anytime that there's futures instruments, you can hedge the underlying spot. So that's the easiest way to hedge Bitcoin. And then some of these other cryptocurrencies that you mentioned that we actually that we mine through proof of stake mining. The way that proof of stake mining works is, I'll use Polkadot as an example, because that was one of the first ones that we launched. When you own Polkadot, you can actually take your Polkadot and stake it to a master node. It's essentially utilizing your currency to vote on a master node, which is essentially creating the blocks for that chain. And when you do that, you get rewarded for those. That master node, first of all, gets rewarded because they're the ones that are creating the block. They're the ones that are storing those transactions and making sure that they're safe. They get rewarded for the mining, and then they pass some of that reward on to the people that stake to their master node. Now we run several master nodes for different chains. One of them, for instance, Zilliqa. We run a master node for Zilliqa. And so we get paid for that, for running that master node. And then we also get paid for staking it. What we've decided to do is create funds that hold things like Zilliqa and Polkadot and Algorand and Dash, and all of those tokens that we hold within those funds, we stake to a master node, and we pass on that yield to the ultimate customer. So that they're actually earning a yield or a return in addition to just holding the currency. And we really look at that. I mean, I look at it like a bond manager, of course, does, right? Where you don't want to just hold something and hope that it goes up and down in value. I mean, that's that's the stock market, right? The stock market equities are supposed to represent shares of the company, but as shareholders, you have very little control. You hope that the board is doing their job. You hope the CEO is doing their job. But if things get really bad, you're not senior secured. You're not really, you don't really have anything that you receive in return. That's for the bondholders, or that's for the senior note holders. Same thing in crypto. Its inherent value is the value that is placed on it, like gold or money or even equities. But if you can earn a yield while you're holding that, then it's more like holding preferred equity, right? Where you're earning a yield off of the equity that you're holding and getting that price appreciation based on what the market moves are.
Okay, so for those of us who are not involved in wallets and everything right now, you have you have a cryptocurrency pile of crypto cash. And I'm thinking, for those who are just getting into this, who might be watching this, let's say you want to convert that to dollars. What do you do?
Yeah, it's really simple. There's now several exchanges, several OTC desks. Those of you that are also involved in the bond market, crypto works very similarly with bonds, where I can call an OTC desk and trade dollars for crypto, or go to one of these exchanges. Exchanges have gotten a lot better in the last few years. Places like Gemini and Coinbase do an excellent job of securing the underlying and making markets. Kraken, same thing. So there's several places that you can go for liquidity. As a matter of fact, it's one of the most liquid assets. And for instance, if you look back last week, during Thanksgiving and the day after Thanksgiving, when a lot of markets were closed, people were trading the news in crypto instead of the markets because they weren't open. And that news being, there was a new Omicron variant, and there was, there's all this stuff happening on the weekend when the markets are closed. But there's a lot of liquidity in cryptocurrencies.
So there's liquidity and there's duration, because you're creating an income flow. So now the question that comes to mind is, how does one value cryptocurrency, since there's technically nothing backing it? There's no hard asset behind it. So what advice do you have for people trying to value this undefined protoplasm?
Yeah, there's several different tools and methodologies that different people use. I mean, I typically fall within the market, right? What value are people putting on it? And one of the main valuation metrics for Bitcoin that a lot of people use is called stock to flow. And that essentially is, how much supply is there currently?
Mhm.
How big is the network? And of course, what's the velocity of that money and how much is
Mhm.
flowing?
Sure.
And all of those factors, it's very similar to pricing currencies in a lot of ways, or even equities. It is how some managers value equities. What's the supply of a publicly traded equity? What's the demand for it? What's the flow?
Mhm.
And that is just as important as all these other metrics that we put on things like price to earnings.
How is this taxed?
Um, I can't really answer that as I'm not a tax professional,
Mhm.
but I will say that pay your taxes when you sell because a lot of people tend to not do that. Um,
You can't do Bitcoin futures from jail. Last time I heard, they don't let
that's
you do that
exactly
kind of.
right.
So
Always
yeah.
pay your taxes.
Okay. 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 So now I'll explain something here. Most of the people that we manage money for are not the super rich. They're people who have worked their tushes off for 30 years. They saved $1 million. They saved a couple $1,000,000, and now they're going to try to back off. Mom has some health problems, and dad's tired of working. He's tired of staring at all the four walls and everything. And they've really put their heart and soul into this. And they look at us and say, basically, we understand we have to take some risk, but we really don't want to lose money. So the tact I've taken with this is I've looked at the non-correlation of this to the stock market and found out that there's a fairly large non-correlation, or at least there has been. And during this period, Bitcoin that I've looked at over the last 5 years, a lot of non-correlation, some bad times and good times. And what I've noticed is that even allocations of I looked at allocations of 1 to 4% greatly reduce standard deviation of the portfolio and improve Sharpe ratios. Now, that's been during a time when there have been bad times, short-term bad times, but generally the thing has gone sky high, broadly, I think. So what I have to evaluate is, have I been looking at this during an unusual period when those metrics have been greatly improved? Or is this something that, might be expectable going forward?
Yeah. So I think what happens at this point of time
Mhm.
is that Bitcoin has now become the 6th largest global currency. And from where we are today, the law of large numbers is starting to
Mhm.
set in. In the last 10 years, we've seen these massive jumps,
Mhm.
sometimes 30x, 100x, 1000x.
Mhm.
But as the Bitcoin network continues to grow and more people are part of it, and the law of large number come in, those multiples are going to tamper quite a bit, right? We're not going to see 30x, we might see 2 to 3x, and then that'll come down to 80 time, 80% higher, 60% higher, 20% higher. It'll start looking a lot more like equities as opposed to what we've been seeing for the last 10 years.
Mhm.
I truly believe that. And there's several reasons why, right? I mean, obviously, like I said, law of large numbers is one of them.
Mhm.
Another really good reason is as a network expands and it's a monetary network, when you have these large investors that are piling in, people like Michael Saylor and MicroStrategy and Elon Musk and Tesla, that are piling in billions of dollars into Bitcoin, it takes more and more billions of dollars for that number to go up, to continue to go up at the same pace.
Sure.
And as the wealthier come in, the not so wealthier start coming in, right?
Mhm.
And people behind it. So number one, it takes more money for for it to go up in the same percentage terms. And number two, there's just not enough money out there to make up for that, right? It's as it gets more global adoption, you're going to see smaller, we'll call it smaller check sizes coming in. So we will start seeing volatility tamper quite a bit, and we will see the price starting to normalize. So you're not going to see what you've seen in the last 10 years, but I do believe that we still have a few more years of 100 times returns or more per year, at least for the next few years.
This seems to be an asset category where the average person has built the category, and now all the wealthy people are coming into it. All the institutions are starting to come into it, which I thought could be kind of a, as I thought about this, well, maybe it'll be the first time that the institutions come in and then there's a correction, as opposed to the little guy comes in and there's a correction. But what in your opinion is motivating these institutions, the Elon Musks, people with big cash? What's motivating them now as opposed to 2 years ago or waiting another 5 years?
Well, if you look at the example of Elon Musk and Michael Saylor, they both run tech companies, right? And they're both tech titans. And people that understand the technology are going to be a lot more apt to purchase a new technology of money than other people that are more fiat based. So those types of people are obviously going to be, the early adopters, and they also understand the global digital economy much better than, say, somebody that's running, some other kind of like a construction business, for instance, right? Where it's a lot more domestic. It's harder to understand global currencies when you're not dealing with global currencies. It's hard to understand the digital economy when we're not dealing with digital companies. But that's not too far behind. So I think that's why you get these types of people as early adopters, and then other people come later.
And this is kind of I'm going to say this question in a certain way. What's Treasury, Fed, Congress, what are they doing to try to mess this up?
I think the cat is out of the bag. I'll admit, when I first looked into Bitcoin back in 2009, 2010, my first instinct was, after a pretty long review, and by the way, at the time I was managing, the sovereign bond and FX desk, and I'm looking at this thing. The Fed's not going to let this happen. This is, this is going to get, this is going to get, shot down, right?
Sure, they're going to do something to blow
later. It seems like, oh well, that can't really happen, right? This is a global thing. This isn't a U.S. thing, right? First of all, and countries might try to stop it, but then other countries will then be on the forefront of digital commerce. And that did sort of happen, right? I mean, the U.S. did try to do some things to outmaneuver it, and then, well, Japan and Singapore and Korea just sort of took the helm and ran with it, and then China caught on, and then China tried to stamp it out, and now the U.S. is taking the forefront again, and places like Wyoming and Texas and Tennessee and Kentucky and Florida. These local governments are saying, no, we want Bitcoin here, right?
Really?
We want mining. If China doesn't want it, we want mining here. We want crypto-based companies here, and they're inviting these companies in with open arms. So they want to be on the forefront of innovation. So I think the cat is out of the bag, and also I think people are starting to get wise to the fact that no, we want to be on the forefront of this innovation. We want to be the leaders of it. We don't want somebody else to be the leaders here.
So what are banks doing as a lobby to keep from becoming obsolete?
Well, I don't think it's so much lobbying to become obsolete. I think a lot of banks are beginning to embrace this technology. JP Morgan, for instance, has a whole division focused on building blockchains for banking commerce. Goldman Sachs has invested a lot of money in companies that are focused on this area. I mean, we're partnered with a dozen well-known named Wall Street firms in this specific area. So no, they've decided that if they want to remain relevant, they're going to have to embrace it. So I don't think there's any lobbying efforts against it. I think it's turned into funding for it.
Okay. How does your Bitcoin futures linked option or futures linked product work?
Yeah, so really at the basis of it, we're purchasing near month futures and holding it until the next roll. It's very simple.
Okay.
Futures tend to track the underlying spot pretty well,
Hmm. Hmm.
and we're simply trying to mimic that price action of Bitcoin through purchasing of Bitcoin futures.
Okay. So it looks like, and this is the way I'm thinking about this area, is that on one hand, it's a brand new area, and for mom and pop who've saved their money over the years, they're now 72 years old or 68 years old, and they're finally going to stop working and have some fun and be done with working, and they never want to have to go back to work. On one hand, yeah, there's some risk in this because it's a bit of an unknown. But on the other hand, I look at the potential cost of not being part of something that is probably going to be, in many ways, a huge change to our entire financial system. And I'm not thinking just of the currency part. I'm thinking of things like how we do contracts, how we transmit money, how we buy and sell, how we work with our Apple Pay on our phones. And do you have any commentary on that, on that big change that's coming, and what perhaps have we not heard about in this big change?
Yeah, well, what's interesting is the reason why I decided to get into the business of blockchain, right?
Mhm.
And that was back in 2016 when I decided to leave my, cushy traditional finance, big firm job,
Mhm.
and kind of go into blockchain. A lot of people thought I was crazy.
Mhm.
By the way, they thought I was crazy when I bought Tesla stock too. But that worked out.
So you're not really crazy?
I feel very crazy.
Nobody's telling you that around the office now or anything, right? We're okay, right?
Not anymore, but I used to be called crazy a lot. I used to be called crazy a lot. But the reason why I did that in 2016 was like something just clicked with me, and it more had to do actually with Ethereum at the time.
Mhm.
And I was looking at the power of smart contracts. And here I am on a bond desk dealing with very esoteric type of bonds, right? Asset-backed securities,
Okay.
basically if it's not in the Barclays Ag, I was dealing with it, right? If it was
Okay.
in the Barclays Ag, somebody else was. So very esoteric securities that you have to review, any kind of transaction, any kind of trade, you would actually have to, review the underlying bond debentures and covenants and make sure that, this looked and felt okay from every different angle. It wasn't your just run of the mill bond. And that was pretty problematic. And it was problematic to trade them because not everybody was a dealer in all of these bonds. You couldn't just call anybody on the street and they're going to have the bond you need, right?
Mhm.
And most asset managers didn't hold them either. I mean, it was a very
Okay.
small universe.
Okay.
And that felt really inefficient, but that's where the yield was, of course, right?
Mhm. Sure.
And when I saw the power of smart contracts, I was like, wait a minute, what if you could program a bond debenture on a smart contract, and that way when there's a covenant breach, or, I mean, you can automatically have this series of events.
Mhm.
And then you could also take bonds and put them on a blockchain to trade easier peer-to-peer, as
Mhm.
opposed to sitting at your Bloomberg terminal trying to figure out who has a market in one of these, off the run bonds, and then making phone calls to see if they actually had it or not, right? I mean,
Okay.
you're paying a lot
Yeah.
of people a lot of money for
Sure.
really doing nothing.
For that
And there's
closed
got to
system.
be a
Yeah.
better way.
Yeah.
And by the way, one of the truest moments for me was I was actually sitting in the old Morgan Stanley office in Manhattan, and I had I was fortunate enough to be sitting in the room with John Mack,
Okay.
and he was talking. He was pointing to the rest of the city and saying, everybody working in this building, everybody in those buildings, they're all going to be jobless soon because technology is going to take over their jobs. We don't need all these middlemen. And I was just sitting there thinking, I was like, wow, like you made a career out of being a middleman, and now you're saying this. And it's like, all right, he knows something, right? This was in 2015, by the way. And it really got me thinking. And then when I had that moment, I realized, oh, there's so much that can be programmatized. By the way, once I started digging in, I realized, okay, there's other blockchains out there that do this better. And then I kind of came back around to Bitcoin and as a cryptocurrency. But there's so many applications and so many use cases for this technology. We haven't even scratched the surface yet.
How do we invest in those other uses and applications?
Yeah, that's really an interesting question. Some of the more interesting areas right now, in my opinion, are DeFi, metaverse, and NFTs. DeFi is fascinating for me because if you think about all of the efficiencies that happen in traditional finance and in trading and yielding, repo, reverse repo, you can all do it automatically on chain. On various blockchains, find arbitrage opportunities and trade against them. And that's actually something that we do in-house too. We manage a hedge fund that does that. And that's really interesting, decentralized finance. The other one, metaverse NFTs, I know it's two buzzwords that everybody hears, but the really interesting thing here is my kids used to play this game called Fortnite. They would spend a lot of money on it because they wanted their characters to be dressed up. And that whole attitude has shifted to people are purchasing profile pictures that have certain rights and certain code that they're the only owner of it, and they can prove that they're the owner of it, and they get certain privileges and rights to be the owner of that. And that's quite interesting right now. Now, those are both pretty minor use cases to what I think is to come. But those are two areas that I think are really interesting to invest in right now.
One of the things you said to me that actually hit with me very hard is the inflation issue. And I know inflation is a lot more than we're being told, because obviously what they're promoting is the basket of goods, which kind of helps them out. But the inflation hedge, do you have a product made for inflation hedge or no?
We don't yet.
Okay.
There'll be more to come on that specifically. But I do believe that a lot of the products that we're dealing with are natural inflation hedges. Like me personally, I own Bitcoin, I own other cryptocurrencies. I purchase art, I purchase classic cars. Like I basically anything that I could get my hands on that, when I started seeing, this was February of 2020. I was like, oh my, we're going to have massive inflation. I just bought anything that I could get my hands on that was a hard asset. NFTs is a form of art, right? Bitcoin, some of these other cryptocurrencies, they're inflation hedges. And by the way, you're right. I mean, you said this twice now. The type of client that you have as a financial advisor are people that that have $1 million in the bank and want to retire.
Sure.
And 10 years ago, $1 million would have done it for you, right? You could have held a very conservative basket of fixed income, yielding you somewhere between 4% and 5%. You could have lived off of it. You can't live off of that anymore, right? I mean, to have a conservative basket of bonds, you're going to earn 3%, right?
Well, you have to have risk assets.
You have to.
And so the person with $1 million or $1.5 million or $2 million, they thought that they were going to be able to. They've had businesses typically that have been very risky assets. They didn't know what was going to come in the business, so that was their risk asset. Now they're retiring, and now we're going to have to put them into other risk assets.
Right.
And I think that's where your product fits in. That's where Bitcoin or generally blockchain fits in. We just have to figure out how, and then convince others that no, this is for real. You don't understand. You're at the beginning of something here that's going to change the world, just like the internet changed the world, perhaps even more.
Right. Well, and by the way, talking about, having $1 million going into retirement,
Mhm.
even then it's not enough, right? I
Mhm.
mean, a million 10 years ago is 6 million today,
Mhm.
right?
Yeah,
And the only way to make up for it, like you said, is you have to go into riskier assets,
you have to
which
go
is really
risk
unfortunate.
assets and cut your lifestyle back probably from what it was before when you were working. But a lot of people are so dead tired of working, and like I said, they have other things going on in life, health issues,
Right.
people issues, and all that. They just a lot of times just want to get out. Not everybody really enjoys and gets energized by going to work. Many, as they get older, are tired, and so that we're dealing with that. Like the lines going down, this in terms of willingness to work, but the inflation line is going up the other way, and it's messing everything up.
It really
It it
is.
it reminds me of a Three Stooges. Did you ever watch the Three Stooges?
Of course.
Okay, so Mo, Larry, and Curly are in this boat, and they have guns. I don't know, they're going hunting or something. And as you can imagine, Curly's firearm discharged. Okay, shoots a hole in the boat. Water's rushing in, and Mo and Larry are over there frantically trying to plug this hole. And they look over, and there's Curly, and he's found a drill, and he's drilling a hole in the bottom of the boat. They said, "What are you doing?" He says, "I'm drilling a hole to let the water out." So that's what I think of when I think of the government right now with these programs and creating all of this inflation. They're going to help us, right?
That is the best analogy I've heard that's accurately what's happening right now. We're going to pass $1 trillion spending bill to stop inflation. We're going to
Exactly.
print
And
more
that
money to stop inflation.
yeah, yeah. And it
We're going
probably
to drill a
is
hole in
never
the
going to have,
boat.
there's probably not a sunset. It's probably, they say it's $1 trillion, but it's going to end up 100 trillion somehow over the next 50 years.
Right.
And then they'll add other programs onto that. So it's pretty messy what's going on.
Yeah.
And is this a panacea? No, not necessarily, but it is probably a step in the right direction. But to not be there for that $1 million retiree for 10 years from now, when that's going to really help fund a lot of what they want to do for a very small allocation is what I'm seeing. It doesn't take a lot of a huge allocation to do well in this.
It doesn't. And by the way, if you asked me 5 years ago, if I would put my parents who are retirement age,
Mhm.
would a 10% allocation of Bitcoin make sense? Then I'm like, no way.
Mhm.
Right? I mean, there's no way. Now you have
They're
no
saying 20.
choice.
Yeah.
You have no choice.
Yeah.
And by the way, what's going to keep driving the price up is if this is what's happening with retirees,
Mhm.
you manage pension funds and life insurance companies the same way.
Mhm.
Life insurance and pension funds have actuarial assumptions on what you need in order to make all of your liability payments. And those rates are quite high. For an insurance company, it's about 5%. For a pension fund, it's about 8%.
Okay.
And you can't get that in fixed income,
Nope.
right? I mean, if you load up all of your insurance assets in high yield bonds, you still don't get 5%.
Right.
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 So that means that they have no choice but to start buying Bitcoin and
Mhm.
other digital assets. So what does that mean? It means that price is going to continue to go
Yeah.
up.
Yeah. Well, those were many of the questions. I think those are most of the questions that I had. Those are very, very real questions. And when I say real, what I mean is when you're actually making decisions for other people's money, these are the kind of things that we have to consider. It's very, very basically, if something goes wrong, it's pretty much our fault, right? Whether it's our fault or not. So we have to be very, very careful on how we move forward with other people's money. With our own, hey, it's not so bad. But with somebody's life savings, it becomes very, very important. And I'm glad you're doing the work that you're doing, because without somebody like you doing the work, I don't know what people would do. And because this has to be part of their portfolio, it has to be.
Yeah, there's no choice. It's
So
unfortunate that there's no
yeah,
choice,
yeah,
but
it
there's
is.
no choice.
Wow. Chris, you asked such incredible questions. Chris and Stephen both, thank you. Chris, if you don't mind me throwing a question onto you really quickly.
Go ahead.
I'm just curious, really it's more high level, but what questions have come across your mind while you've been researching and considering adding to this to this asset class to your clients' investment portfolios? I mean, as you've gone through your journey of trying to consider this, how take us through it.
All caps, correction.
Yeah.
Okay. So a lot of the questions that have come to my mind are the ones that I asked. The valuation question was probably a big one at the very beginning, but then, and I know what he's talking about when he's talking about, total amount of flow and velocity of that flow. This is an area where I've had to accept that it's very difficult to value something like this. It's just very, very difficult. However, on the other side of that, it is a technology or a know-how that cannot be overlooked. It's like cars. Okay, now it's like cars and it's not. When back in the late 1800s, mid 1800s, everybody's riding bicycles. Okay, and bicycles are pretty cool. Cars came along and they solved an immediate problem. And the immediate problem is we don't like horses. And so we can get in this car and move along. So people went out and bought this car because it was very obvious. The practical application of this is not an immediate thing. So we have to really, I think, teach our clients to start thinking like Stephen and like you, where intellectually we know this has to happen. It has to. The world population and the professional population is not going to let this know-how lie and do nothing with it. We just haven't necessarily found the key solution that propels us into bajillions of dollars so all these retirees can relax and have houses next to you guys who are making bajillions of dollars in this right now. Okay. So that intellectual change, we can a lot of things in investing we understand from an emotional standpoint. We make our decisions emotionally. We really have to go into our heads in this though and understand that this is coming. This is like a Star Trek thing. We have to understand this is coming and forget about the emotions for a while and make it, as much as possible emotionless decisions. That's what I try to get our clients to do. But I think with blockchain overall, I don't mean just with Bitcoin, to not be in on the ground floor of this is probably a large mistake. And that's my journey from beginning to end. Now the question is, okay, how do you do it with understanding that clients will look at it, let's say there's a correction in 6 months from now, they're looking at it and it's bleeding. How do you deal with that? Because no matter how many times you tell them, you have to look at it with your head, not your heart. When they see their balance go down, they become nervous. They lose sleep. And I think that what happens there is you dollar cost average in with small amounts over a long period of time until they get used to it. If they see a picture long enough, they become familiar with it, and it becomes a part of their lives. And so to me, the key is the dollar cost average in. Small amounts. Let them get used to it. They'll think you're a hero. And in the background, you're going, I hope this works. But because nobody knows exactly what's going to happen. But what we do know is that this know-how is not going to go away without being implemented on a very large scale in many areas of the world. It's got to happen. So, and the drive for it will be saving money, efficiency. So, and what human beings like certain things. They like living by water, they like efficiency, and they like doing things for cheaper. Okay. The last I heard, that's why places like Walmart and Costco are around. Well, we feel bad putting all these local retailers out of business. No, they don't. They're going there to buy their gas and everything else. They feel bad, but on the other hand, they think in their head and they go, well, I got to do this because then I have more for myself. This decentralized world that you're talking about is going to allow people to do what's best for themselves without an intermediary taking a bunch of % along the way. This has got to happen. This is human nature. This is economics at its most pure. You said you have an economics background. Economics at its most pure. The virtue of selfishness made into real. That's an Ayn Rand bit. That's an Ayn Rand book, by the way. It's a little short one. I think it's Ayn Rand or Nathaniel Branden. Is we look out for ourselves, we help everybody else. That's what I see this doing. This is beautiful. This is like a racehorse.
Thank you, Chris. I don't think we could have ended it on a better note. And I appreciate the Star Trek analogy. Stephen and I met William Shatner at a conference recently because he has been especially Ethereum advocate for quite a while. So, people wiser than us, know.
Well, if it's good enough for Bill, it's good enough for me.
Yeah, exactly. Well, I think I'm actually going to give everybody 4 minutes back of their time and end it here. I think that was just brilliant and fantastic, and I'm so appreciative. Everyone, I did collect, as did Annie, our wonderful Annie, collect everybody's questions. So we do plan on following up with answers to your different questions. I want everybody to note that at Valkyrie, we do a lot of different educational sessions that probably do answer a lot of the different questions that I've seen. Stephen has a podcast. We have the light bulb series. We really try to put out as much content as possible. And I just wanted to make the final note that, you will receive a follow-up email with the recording, as well as a form to request the CFP credit if you're interested. So please write to us, and we're excited to do this again. But Chris, it was a real pleasure and honor having you on today. Those questions were fantastic. You made my day easy, and I just got to sit back and enjoy and learn as well. So thank you so much on many fronts.
I had fun too. I learned a lot.
Great. Well, everybody have a wonderful day. Thanks for joining us.
Thank you all.